a fan of following the money. I think that is the easiest way to make money in the stock market. When the president made almost $600 million in crypto and just so happened to pass the Genius Act just a few months later, it raised a few eyebrows. So now when he invested more than $80 million in bonds, it tells me there is something to pay attention to, especially when there was one company on this list that he bought bonds in that should definitely raise a flag. So what is actually going on here? Should we pay attention to this? And what bonds did he buy? Which companies are these in? And as an investor, what is it that we can learn and perhaps adjust our portfolios to? Let's go ahead and break it down. All right, first, how do we know that all this is going on? Congress people, those in Congress, and the president have to disclose their trades, plural. And there were 175 buys by the president between August 28th and October 2nd. We found out about this on Saturday. I'm recording this on Monday, September 17th. Now, when you see this, it's going to be at some point this week. Okay, depends on what news comes out, when I edit, and when this comes out. Okay, so I'm letting you know when I found out. All right, but those were the number of trades reported first by Reuters and I think CNBC. Now, generally speaking, bonds are known to be more defensive in position or in nature. Meaning, if you think the stock market is going to go down, you're going to shift more of your money towards bonds. So some people are thinking, hey, maybe the president thinks that the market and the economy is going to tank. He's going towards bonds. Maybe we should all do that. Not necessarily there, but there is absolutely something that we can learn, and I think there's a red flag here within this, so that's why we're going to get to it. But what are bonds for those that don't know? Because we have some beginners here, right? Bonds are loans, essentially loans that you are making to a company. It can be made to a state of North Carolina, state of New York, or even to a city, right? To the city of Los Angeles or a school district for that matter. You're saying, hey, I'm gonna loan you $100, usually in increments of $1,000, $1 million, whatever, and they're gonna loan it out for 5 years, 10 years, 30 years in some cases, and then they're gonna pay you back X amount of interest for that amount of years. For older people especially, but even for younger people, it provides a consistent source of income, provided that their credit, right, they do have credit scores provided by Moody's and S&P, but these bonds have scores and they are, provided their credit is good. That's can be a consistent source of income for you, because you're saying, hey, I bought this bond, it's going to be 10 years, they're going to pay me 10% of 1,000, 10% of 100,000 for all those years, so long as I hold that bond. You are pretty much guaranteed that return if you hold through that entire time. Now, the only bonds that are truly guaranteed are the ones issued by the U.S. government. Those are U.S. government bonds. The only reason why we say that is because they got taxes, right? They're going to tax your tail. That's it. Now, cities can go bankrupt. States can allegedly go bankrupt, though I have not seen it. And obviously, companies can go bankrupt. So, nobody else is guaranteed. But do you think Walmart's going to go bankrupt? Probably not. So, those are close. So, I say pretty much, but still possible. So, that is why people tend to invest in bonds. Now, which bonds did he buy? He started off with chip makers, or at least I sorted this list by chip makers. Broadcom, which is also a company I like, so if you are interested in stocks, which I'm going to split the difference here, I do like Broadcom as a stock. I think that makes sense. He brought Qualcomm, so Broadcom and Qualcomm as a stock, not that big of a fan. And then Meta, which makes a whole lot of sense. And the interesting thing, you do always have to peel back the layers here. Remember that Mark Zuckerberg, who runs Meta and founded Meta, was also at the dais, that is the platform, during the inauguration. He was there. They know each other. How close they are, I can't necessarily say. Right? I haven't talked to either one of them. I don't know these people, but I saw them there. We all saw them there. But in either case, that does say something, right? The fact that he did decide to buy individual bonds is not as easy as buying individual stocks. You got to do some effort. You do a bit of effort. And the reason why I say this is because, again, you have to choose the interest rate, choose the length, right? And then the number of bonds that you have. It is not the easiest it's not as easy. Okay, it's still a push of a few buttons, but again, it is not the exact same thing. And also, again, bonds have grades. Me and you buy the same share of Nvidia, it is what it is, right? And it's just, we all got the same Nvidia. It's different when it comes to bonds. A 5-year bond pays a different rate than a 10-year bond. It can still be the same company, still be issued by the exact same company. So again, it takes a bit more effort and strategy behind how many years, from what company, so on and so forth. So interesting that you took the effort to invest in Meta, a CEO that you clearly have some proximity to, if not a close friend. Next, he has some retailers. I found that interesting. Home Depot, I think, is doing quite well. CVS is not. I don't know if I would buy a bond in CVS. Also, investing in any retail company when you are the one charging ETFs and making it what I would think to be much harder for these companies to do well is a choice. I don't know why you would do that. But hey, that's that. And then you have some major investment banks. Goldman Sachs is a very good stock in my view, so I think that one makes a lot of sense. We haven't talked too much about banks. I think we did the first half of the year, but I hadn't come up in conversation. But Goldman Sachs has done well. JP Morgan is okay, and then we have Morgan Stanley, which we did talk more about, but it's still pretty good. Now this is the part that really caught me off guard here. As we get into this, don't forget about the Building Bread Brief, where I help you to see the stock market and the economy clearly. You can sign up at buildingbread.com/news. Now, here's the thing. Remember several months ago, he said the United States was taking a stake in Intel because Intel was underperforming, which I agree with. You guys know that I invested and lost money in Intel several years ago, and the stock had not been doing well. So go back, circle that again. The stock had not been doing well. We bought a good chunk in Intel. He then bought bonds in Intel. And now, since August 12th, the stock has taken off. And if you go back during my regular standard, now because of the way the stock has taken off, it is now up 76% in the last month, and because of the way it is taken off, is now up 56% in the last year. Now, I don't need to tell you the ethics of using our tax dollars, right? Tax dollars that me and you pay to buy a stake in the company, which perhaps helped to boost the stock, and then use that to buy bonds in that company, which could have made those bonds a lot more valuable. Like that, I don't know if that ain't right. Right, especially when you have, or you may have, insider knowledge. You have insider knowledge. Okay, there's no may there. You made that decision. You had insider knowledge, and that is not okay. All right, that feels like an ethics violation, and this is kind of like the insider trading stuff that makes a lot of people upset. Now, again, the good part, and I'm putting that in air quotes, is that we know about it. We did clock this and talked about it back then, and I said, if I remember correctly, in that initial video, that hey, if this works, this could boost the stock price, and I'm bringing it up now, should you decide that you want to invest in it, because I said back then, as I said at the top of this video, following the money, I find to be a decent strategy. Okay, when the U.S. government is investing the money, it's easy to just ride the coattails of that, and that appears to have worked. Now we'll see whether or not Intel is going to continue to do well or not. I have no idea, but I just wanted to throw out that observation. So now we have those bonds and those companies. Should you invest your portfolio, and what does this all mean for you? Number one, you don't have to adjust your portfolio and be more heavy in bonds. However, you do want to see what your current allocation is, meaning how much in bonds versus how much in stocks. Now, this is just a rule of thumb. It's just a rule of thumb because everybody is a bit different, but most people are kind of shifting to what is called the rule of 110. 110 minus your age, and that's going to equal the percent you are supposed to have in stocks versus the percent you're supposed to have in bonds. It's just a rule of thumb. Okay, not everybody agrees with it. It's not absolutely perfect. So again, 110 minus your age, that percent. So for example, you're 30, that's 80% in stocks, right? And 20% in bonds. Okay, I feel like I said it wrong the first time. Okay, and that's just a rule of thumb. Everybody's going to be a bit different. Perhaps you're riskier, perhaps you're more conservative. If that's the case, right, if I'm near that, real close to it, I'm probably fine. I probably don't need to adjust my portfolio too much. I don't have to go out and buy individual bonds. Though I have sold individual bonds to people, I would say it was frequency is what it was. It was 20% of clients, but that 20% kept buying bonds over and over and over again because they had ones that would expire or mature, meaning that term was up, and they would just keep buying. But it wasn't 100% of those clients. Most people just get them a bond fund, call it a day, because it's a lot less hassle. So that's just, you don't have to do it. What I do think is important is paying attention to your allocation, right? What that percentage is between stocks and bonds. I also think it's important to pay attention to those companies, right, on the stock side of things. I've talked about Broadcom, been investing in that for a while. We talked about Meta, maybe you want to invest in that, and now we're talking about Intel, and maybe that stock is turning the corner now. That I would also pay attention to, because it is important to know where that money is being spent and if it is going to benefit you in your portfolio whenever possible. If you want to know more about where money is being spent and whether stocks might be doing well right now, you want to check out this video right here.